We have with us Mr. Vikram Oberoi, Managing Director and CEO, and Mr. Kalol Kundu, CFO. As a reminder, all participant lines will be in mute mode, and this virtual meeting is being recorded for compliance reasons. We'll have the opening remarks from Mr. Oberoi, followed by a Q&A session. Thank you, and over to you, sir.
Actually, Naveen, what I'm going to request Kalol to do is to start with the presentation, and then we'll be happy to take questions if there are any. So Kalol, over to you for the presentation. I think that'll give people a good overview.
Sure. Is my screen visible to everybody?
Yes, it is.
Yeah.
All right. Good morning, ladies and gentlemen, and it's a pleasure, as always, to be part of this analyst call. And I'll take you through the presentation that we had already uploaded in the to the stock exchange websites. Sorry. So the key highlights are, insofar as the industry is concerned, from HBS Analog. This is the latest report of January 2022, which says that the domestic air traffic has increased by 6% in December 21, with easing travel restrictions, declining COVID cases, and aggressive vaccination campaign. The hotel industry recorded the highest monthly room rates since the onset of pandemic, and this is the whole industry as a whole. Basically, the gradual resumption of corporate travel is assisting in the recovery of hotel demands in the cities, and the metropolitan cities of Calcutta, Mumbai, Delhi, Bengaluru, and Pune, which were previously underperforming. There has been, as per the HBS Analog report, some grand openings and signings by properties which have increased quite substantially. The rising number of Omicron cases in India has resulted in subdued leisure and business travel demand in January. However, the industry expectation is that there will be a strong rebound in domestic travel as soon as the cases subside. Insofar as the statistics are concerned, the signs of recovery are visible with year-on-year growth in the last couple of months. In October, November, and December, the industry grew by about 26%, 43%, and 34% in ADRs, and an overall RevPAR growth of about 134%, 156%, and 84% over the previous year, the same quarter previous year. Compared to that, our company grew, the RevPAR of our company grew by, if we were to take only the hotels in EIH Ltd, it grew by 142, 167, and 107%. And if we take all the domestic properties, basically a hash total, which would show that we've grown in tandem with the industry, which is 133, 146, and 112. The RevPAR index continues to be decent. We continue with our mantra of enduring, revitalizing, and flourishing. Balance sheet continues to remain robust, with net worth at similar levels as we have been over the last few quarters. The asset base continues to be strong, and our debt is well within control, although there has been some increase vis-a-vis in the last several quarters, because of the first 2 quarters we had a loss, so therefore that really needed to be funded, and therefore the slight increase in debt. We do hope that this will remain under control till the year end. Our weighted average cost of debt as on 31st December was one of the lowest at 7.1%, which is reduced by 8 bips in 1 year. This chart really shows the RevPAR recovery, which improved substantially after the second wave of COVID-19. It shows from the Q3 of FY20, which was a normal year, to Q4, what was the trend like, and then it plummeted because of the first wave, and then the recovery in the second wave for both EIH and domestic properties, and the way it has gradually gone up. And as is visible, the recovery after the second wave is substantially better than the recovery after the first wave. In terms of occupancy and ARR, as you can see, the trend lines show that there is an upward move in terms of both occupancy and ARR. Obviously, we are still to touch the FY 2019 kind of levels, but we are almost there insofar as the last couple of quarters or last couple of months are concerned. The brand promise of our company of promising to be the best, high on ARR and RGI, that's evident, and we continue to maintain this position. City-wise revenue recoveries, Bombay has seen a very good recovery, also Delhi, and as you can see, the leisure locations are obviously they were already doing well, and therefore the rate of recovery seems a little tepid. But like Mr. Vikram Oberoi, I think was mentioning before the meeting, really speaking, the leisure locations have done really well. If you were to classify in terms of our own segmentation and internal segmentation that we use, Oberoi Metro properties, Oberoi Leisure, Trident Metro properties, Trident Leisure, Trident City, and others, then one would see that the improvement is most in case of Trident Leisure and the Oberoi Leisure properties, but also it's doing well in terms of in the other metro locations as well. Food and beverage revenue continues to grow, and compared to FY 2020, it's shown a much higher growth, and therefore obviously the percentage of food and beverage revenue to the total revenue has increased quite substantially. In fact, in Q3, the growth in versus the previous year, the same quarter, is a very steep at 186%. Oberoi Leisure continues to outperform expectations in terms of RevPAR. So between ARR and occupancy, if you see the way it's plotted, the Q3 of FY22 stands at a very decent position in the grid. This could be a significant chart for those who are interested. Basically, this goes quarter on quarter. This is for the consolidated one, and there's one slide after this which is for standalone numbers. So really speaking, this shows right from Q3 of FY20 to Q3 of FY22, all the quarters. And the last two bars really show the quarter-on-quarter growth. So revenue has grown 53%, EBITDA by 91 crore, PBT by 99 crore, and PAT by 78 crore. Obviously, this makes it the best quarter in the last 7 quarters since the onset of the pandemic. A similar story is in case of the standalone numbers. And the presentations are available for everybody to go through separately. The company continues to be on this trend of efficiencies and improving efficiencies in almost all parameters, where other administrative expenses came down by 29%, payroll, etc., by 16%, which is consistently now being maintained for the last 2 years, as you would know. Overall corporate cost came down by 32%, and total expenses down by 19%. So that really shows that efficiencies are here to stay. There's been a lot of efforts we've announced in the past about our solar plants, which have been commissioned in the hotels, in some of our hotels. We've included the ones which EIH manages as well, but are not really owned by EIH Ltd. So Oberoi Vanivilas and Oberoi Uday Vilas are owned by EIH, and Triton Tower and Triton Udaipur are owned by EIH, associated by managed by EIH Ltd. Solar plants with a total capacity of 3 megawatt have been commissioned, which is expected to generate about 4.2 million units per annum, thereby substantially reducing the carbon footprint. As of now, with the current level of sunlight, etc., that is available, that has been available over the past few months, 36% of the electricity consumption is being met through solar power generation at these locations on an average. And the average cost per unit of electricity has reduced from in these 4 locations, again taking together, is from 11.5 per unit to 6.8 per unit. And the hotels which are currently consuming renewable energy are listed down here. Of course, in Bangalore and Chennai, it's wind power. Performance highlights. I'll not really run through these numbers. I'll just give the highlights because these were published. So in Q3 in standalone, the standalone results have improved substantially with revenues from going up from 167 to 324 crore. And for the 9 months, it's up from 275 to 631 crore. And I'm sorry. The EBITDA is 78 crore for the quarter against minus 16 of the previous year's same quarter. EBIT at 50 crores. And finally, we have a PAT of 32.6 crore in the current quarter. But because of the losses of the previous 2 quarters, the PAT for the 9 months is at minus 111. Consolidated P&L also shows a good picture. And much of it is because of the contributions from Wildflower Hall, Mashobra Resorts, which is a subsidiary of the company, and also from Mumtaz Hotels, which is again a subsidiary which owns the Amar Villas. And here also, on a consolidated basis, there's a total comprehensive income of 38.5. And on a 9-monthly basis, it's 105 crores minus, again, because of the first 2 quarters of the loss. Brand positioning continues in terms of offering the best to our customers. There are really revenue generating opportunities, which really has held the company in good stead. Basically, some campaigns such as Book Direct and Best Rate Promise through the brand website. And this has seen our revenues through the brand websites increase quite substantially. There is an aggressive promotion through digital marketing in terms of offerings, which really provide a lot of value to our customers in terms of something called the Uber Select, which we've spoken about in the past. The festive season also has seen a very good response. And the reaction, comments, etc., on social media, etc., is visible here. The corporate structure, it's the same as has been in the last few quarters, except an addition of Kuku, which is the standalone cafe that has come into operation on October 8th. And the number of hotels remain the same as of now, with the plans, of course, for future expansion intact as it was earlier. So that's all from my side, and I'm sure Mr. Vikram Oberoi and I will be happy to answer any questions that anybody may have. Thank you so much.
Thank you, Kalal. Anyone who wishes to ask a question, please raise your hand. We'll unmute you and take your question. So anyone with a question, please go ahead. Okay, the first question is from Amit Agarwal. Request the participants to please introduce themselves and the name of the company they represent before asking the question. Amit, please go ahead. Amit, please.
Hello.
Yes.
Good morning, Mr. Oberoi.
Hello, Amit. How are you? Good afternoon.
Thank you. Congratulations for a good set of numbers during this COVID times.
Thank you, Amit.
I have two questions regarding the company. First is regarding Coco. How's it been doing? And it's been 2 months that it's operational, so you must be having some idea about the expansion of the brand Coco to cities like Delhi, Calcutta, or some other cities, or what is the initial plan? I understand it's too early, but still you must be having some vague idea how you plan through for the next 2-3 years. Thank you. And my second question is regarding company presentation have been silent on Doha property, which was supposed to be open in 2022. And what is the update on London property? I think 2-3 years back you spoke about some collaboration and some with some multinational company about London property.
Sure.
These are the two questions. Thank you.
Sure, Amit. First of all, nice to be online with you again, and I hope all is well with you and your family. On Cuckoo, Cuckoo has been well received. In fact, our guest feedback has been very positive. But we've been impacted by unfortunately by COVID, people going to public spaces, particularly in Bombay, where there was a concern that there'd be a sharp rise in infections and possible hospitalizations. Thank God that hasn't been as severe as was initially expected, but that did dampen footfalls to the location where Cuckoo is, and also as a result to Cuckoo. But I think the important thing is guests really appreciate the quality of Cuckoo, both in terms of the food and beverage offerings and the quality of service. And we hope that once things return to some level of normalcy, which I think will be very soon, Cuckoo will again start to do well. There were days actually where Cuckoo was doing very well with high revenues. So we know that it has the potential to succeed. Insofar as your question on future expansion, you're right, Delhi would be a natural choice. We still would like to let Cuckoo stabilize, learn what we can do better, and then look at growth. So that still continues to be our plan. You asked about Doha and also London. London, actually, because of the pandemic, the owners of the service departments, luxury service departments, decided to sell the property. So London will not be happening. I hope we'll have other opportunities in London and in other parts of the world. And Doha has been delayed. The hotel will not be ready for the World Cup in Doha. So that's an update on both of those.
Hello.
Yeah, hi, Amit.
Yeah, this is regarding Cuckoo again. Do you think getting leased properties in this shopping malls will be a problem for Cuckoo in the future? Because I think you are looking for a bigger space compared to the other cafes that has been there in the existence.
No, I think luxury retail is a great location for Cuckoo.
But have you figured out some properties in other cities right now, or is still too early to decide about it?
We have a fair idea of where we'd like to be, but it's best that I don't comment till we have some good news to share.
And the last thing, can you share some numbers on the daily revenue you were able to generate on Cuckoo in this COVID times?
Is it okay to share that, Kalol? Can we share numbers?
It's Amit, very specific numbers. I think it's better not to get.
I think it's still too early. I understand that, but the highest you reach on certain days, that would be a good idea for the investor for the future expansion of the whole brand.
Kalol, I'm happy to share the numbers. I don't know if I should or not.
Okay, fine. I think it's a public forum, so.
Yeah, I can share.
Maybe only the highest numbers. Let's share. Let's not get into too much detail.
It was over 3 lakhs a day.
Oh, great! Thank you.
Thank you, Amit. The next question is from Sumant Kumar. Sumant, please go ahead.
Yeah, hi, Kalol. Hi, Vikram.
Hello, Sumant. How are you?
I'm good, sir. How are you?
I'm well, thank you, sir.
Overall, my question overall, we have seen significant improvement in ARR in the leisure side, but still in the metro side, as per the PPT, the Oberoi 27% lower ARR compared to a pre-pandemic level, and also say Trident brand has a 30% lower. So this time, in the past quarters, we have seen the ARR and occupancy has been driven by the leisure destination. Now talking about going forward, yes, Q4 is going to be have some impact in the ARR side also. But how much time do you think the gap of 27-28% of the business hotels gap of versus pre-pandemic? What's your thoughts when we can have this gap is going to fill in how many quarters, which year? Some perspective on that.
Thanks, Sumant. Kalol, please feel free to add, but I can start. Sumant, hotels in metro locations, city locations, depend largely or to a large extent on corporate travel. And we saw corporate travel resuming gradually, but it was, and we saw month increases in Q3. But for rates to go back to the levels that they were will require corporate travel to come back, maybe not totally, because there are some other segments that have been developed over the past 2 years, but it's fundamental that corporate travel resumes. And I can't tell you when that will be. I didn't expect, none of us expected Omicron to happen. I hope the expert opinion pandemic is over and any subsequent variants will be less severe holds true. If that happens, corporate travel will resume. And I would imagine in the beginning will resume with a spike because people just haven't traveled for so long. So the first opportunity that they have to travel safely, they will do so. We also expect international corporate travel to resume. But that's dependent on these variables, and your guess is as good as mine on this. So I don't know if I've answered your question, but it really is fundamental that corporate travel resumes.
Now, talking about overall Trident leisure, we as per the PPT, ARR in Q3 22 is around 2,000 per room night higher compared to Q3 20. So, what's your view? Is this rate is going to sustain at this when the outbound is going to start?
So again, a good question. Let me just give you a little bit of breakup on that. Kalol, is it okay to get into? Yeah, I think it's fine, right, on specific hotels. But this was really driven by Trident, Udaipur in particular, and particularly the weddings that take place in the hotel. Very, very high rates. And strong occupancies at the hotel. So all segments did very well in Udaipur. Similarly, in Jaipur, the Trident Jaipur also saw improvements in both occupancy and average room rate. Is this here to stay? I hope it's here to stay.
When talking about the pent-up demand, particularly there was lag of the marriages had been postponed in the past, and because of the higher demand, ARR has improved significantly even versus pre-pandemic. So, is there any risk to the ARR, or it is going to stagnate here, or it is going to decline maybe to the pre-pandemic level, or some correction from here?
Suman, I think one thing that has helped not only us, but other hotels, other than the very, very large hotels that have extremely large banqueting facilities, is that wedding sizes were limited. And I think, is weddings going to continue to be small? I don't know. If weddings continue to be smaller than they were earlier on, I think many hotels will benefit, including some of ours. If weddings return to the large gatherings that took place, then many hotels will not be considered for those weddings, including some of ours. So hotels like Sukvilas have benefited from small weddings. Rajvilas has benefited from small weddings. Amarvilas has benefited from small weddings. Udaivilas actually has always done well on weddings because there are many hotels. The Trident is next door, and other competition hotels are located quite close to us. So even prior to the pandemic, it did very well, and it will continue to do very well in future. But others that are more in locations where there aren't comparable hotels next door, if weddings resume to then full size, we'll see an impact.
Can you talk about the occupancy of metro hotels and what was the reason to be a decent OR in this quarter?
Sorry, could you just repeat the question, Sumit? I'm sorry.
We have given overall occupancy rate,
yes,
for the hotels in the PPT. So can you talk about the metro cities occupancy in this quarter?
So which hotels did particularly well were, in terms of occupancy, was the Oberoi in Bangalore. It's also benefits because it's a smaller hotel for our city hotel locations. It's roughly just over 160 keys. Vis-a-vis our other ones that are, Delhi is 220, but Calcutta also did well in Q3 from an occupancy perspective. South Mumbai, the Oberoi Mumbai ran lower occupancies with a higher rate, and the Oberoi New Delhi, even though we're STR1, ran higher occupancy, lower occupancies, but a very good rate.
So whatever the occupancy was, what was the key driver for these hotels? Customer side, these hotels. Customer side, these hotels. Customer side, these hotels. Customer side, these hotels.
So again, there was, like I mentioned earlier, there's some corporate travel that started to resume. There were socials. It's all the usual stuff, Sumant. It's the usual segments that performed.
Okay, thank you so much.
My pleasure. Thanks, Sumant.
Thanks, Sumant. The next question is from Achal Kumar. Achal, please go ahead.
Yeah, hi. Good morning, sir. Hope you all are keeping well. So this is Achal from HSBC Securities. So I had three questions actually, if I may. So first of all, what kind of structural changes do you see in the customer's behavior going forward that could have a long-term positive or negative impact on the hotel industry? And when I say change in the customer behavior, of course, we've been hearing that the customers now would prefer more hygiene factor, and that means the big hotels with better brands like yours will benefit. And probably the people will start combining work with leisure. So that means, they will have a more short breaks for leisure trips. So what sort of structural changes do you foresee in the customer's behavior, please? That is my first question, please.
Okay, so certainly, Achal. Hello, how are you? I'm glad you're well. So Achal, I think you've covered two of them already. So I won't comment on those, and both those are positive. The only one that I think is a concern for us is whether a decline in corporate travel what the decline in corporate travel will be. There will we anticipate some decline in corporate travel. People have learned to conduct work online. And if you look at various reasons why people travel, some of those meetings may take place online, but there are others which will essentially require corporate travel to still take place, particularly when you're trying to secure new business and you're competing against others. There's no substitute for face-to-face meetings. So it's really a question whether the other unintended consequences of post-pandemic, you covered two of them, whether they will more than offset any decline in corporate travel.
Right. So, Mr. Oberoi, so as you rightly said, I mean, of course, some of the corporate travel would probably not return because of the Zoom meetings and all the technology. So, what is it that you think could offset the loss from the corporate travel?
I think one is people are taking more breaks. They're taking shorter breaks. I think the trend of people taking holidays within the country, I hope that will continue. So staycations, I think we weren't, or hotel companies weren't as aggressive as they were for staycation business. That is likely to continue as a source of revenue, particularly at city hotels when occupancies fall on weekends. So I think those are the businesses that will hopefully offset declines, and people combining work and leisure, people being able to travel and still conduct their work, not necessarily confined to an office anymore.
Okay, I mean, linked to this, also wanted to understand your thoughts on the customers spending on the hotels. I mean, so it's a question, for of course for some categories of the customers, they really don't care about the budgets, but many are there who sort of have an annual budget. Okay, fine, I need to spend 2 lakh on the leisure trip. So and they spend sort of, you can say that 50% on the air travel and 50% on hotels. So I mean, do you think there will be a change? People will start spending more on the hotel side, less on the travel, as they prefer to drive down to the nearby places, or do you think that will remain same, probably come back to the normal levels?
It's a very tough question for me to answer, because I'm looking, I can't gaze and tell you what the future will be. I think one thing that we have seen is a change in consumer behavior across the world, which is for more experiential travel. So initially, people would want to buy goods and services, or goods, whether it was a watch, a car. I think people now are shifting some of that to experiential spending, and travel comes right on top of that list, including hotels. So I think that's a very positive trend. It started in the Western world some time ago. We're also seeing that in India. I don't have any quantitative data to give you on that, but certainly in talking to our guests and corresponding with our guests, we see that trend.
I'll just add to that, Achal, in continuation to your question, actually, you talked about this budget of people having 2 lakhs and whatever else, as budget. I think that's one of the reasons why, programs like the Oberoi Select are very successful.
Right.
That really gives an opportunity for a person to block, a year's travel probably at very competitive rates.
Right. So,
are you familiar with Oberoi Select? Are you familiar with the program?
yes, sir. I am.
Have you subscribed to it?
Not yet.
Well, I think thinking of holidays with your family, it's it's certainly well worth subscribing to. It's a great value, a great program, and Touchwood, it's been really well received by.
Right, sir. Right. No, I've stayed at your Uday Vilas Hotel, and it was really nice experience. I must say.
Great. Well, please go back and visit.
Oh, sure, sure.
I think, and try Vanya Vilas
Sure,
too.
sir. Okay, sir. Moving away, I had a question around the property prices. So, sorry, how do you see the asset prices moving? I mean, after a 2 years long challenges, the industry is going under tremendous financial stress. There have been some permanent exits in the non-branded space, but not many in the branded space. Now, combining all that, do you think the property prices are going down? And since the financial stress is there, more and more property owners would be ready to sell out their properties or lease out or give on the management contracts at a much lower price, since they are not able to run the properties. And that means the properties with or the hotel owners with the strong financial muscles will benefit in terms of right priced growth or the at the right price or a low price. What is your opinion on that, sir?
I'll ask Kalol for help, but I can start. So I think, hotels were, or many owners, and without naming specifics, were under some financial strain even before COVID. And I think that's been made worse. So will that happen? More than likely it will, included branded hotels.
And does that mean you see the opportunity for the players with the strong financial muscles to grow at a right price or at a lower price?
I think it's really demand and supply and the force of economics that will determine that. But do I see that there will be opportunity in the market? I do believe there will be opportunity in the market.
Okay, sir. My last question on the corporate side, although you have touched upon on the corporate side, but have you sort of started discussing with the corporates in terms of renewal of the contracts and all? So how? So what does your experience say as of now? That when do you think the corporate travel would be back, or what is the level? Any thoughts on that? I know you already shared, but any additional thought you want to share in terms of your agreements or your discussion with the corporates?
What I think why people didn't travel because they felt a risk associated with travel. The minute that risk is either gone or diminishes, I think corporate travel will resume. And I expect corporate travel to resume for the remainder of the financial year, leave alone next year, next financial year. So I do see corporate travel resuming over the next 2 months or 2.5 months.
Okay, sir. Perfect. Thank you so much, and wish you all the very best. Good luck.
Achal, we look forward to welcoming you to the Tiger Reserve, right?
Oh, sure, sir.
Thank you.
Thank you so much.
We have a question from Deepak Verma. Deepak, please go ahead.
Hi. Hello, Mr. Oberoi. So I have a small question about corporate travel. Since you're saying that is an area of concern. So just wanted to assess how big a revenue share is it? Pardon my ignorance if I don't know yet.
Deepak, I don't have the figure. It varies from hotel to hotel. So for
overall percentage?
I don't have that. I'll have to look at the pre-pandemic number, and I don't want to give you a wrong number, so I'm not going to have a guess. So I'd rather not answer that question because I don't want to give you an answer which is not absolutely precise.
Fine. I just wanted an approximate number.
Corporate travel will be the single largest segment in city hotels. So it'll be the single largest segment.
Okay. And the other thing I see is the other expenses in the latest quarter, or actually in the last 1 year or so, has gone up. So any comments on that?
Kalol, do you want to take that?
Yeah, nothing really to speak about, but I'll give you some. It's gone up marginally, but it's mainly on account of there's a lease rent that has got added because of the new cuckoo that is there. There are some repairs which we were a little slow on in the last financial year, meaning in the year of the COVID. So those we have done, and nothing really much. Everything else is more or less the same. I think there's a small increase in renewals and replacements.
Kalol, does hygiene, all the hygiene measures come within that as well? Because I don't know if that's coming under, I don't know how it's classified, but
yeah,
if
it is Vikram, but it is comparable because there's no change in
from the
hygiene numbers from the previous year. So that's similarly. So it's all in all, it's gone up from about 214 to 298, and the details are as I mentioned to you.
Okay, I was just looking at
also power and fuel. I think power and fuel also there is a slight increase because of rates in some cities.
I was just looking at the 9-month consolidated numbers, which seem to have gone up by about 100 crores. So I just thought I'll ask.
Which is what I just said, 214 to 298. So it's gone up by about 80 crores or so.
Good. Thank you so much.
Yeah.
Thanks, Deepak. Thank you very much.
Friends, anyone with a question, please raise your hand and we'll unmute you to take it up. Anyone with a question? Probably questions are done. Thank you.
Can I ask one question?
Please, Deepak.
So, Sumant here. Can you talk about air catering business? How is the performance currently going
on? So international travel still, as you know, hasn't resumed, and we many of our clients were the foreign airlines. So some have started to fly, but the flights are not as frequent as they used to be. So that obviously has impacted revenue and profitability. And we are increasingly catering also now to domestic airlines, and that is at a low cost with smaller margins. Kalol, would you like to add anything to that?
Yeah, I think, Sumant, the good news is that revenues with the airlines that have been currently taken on and before international travel resumes, the good positive thing that we've seen is vis-a-vis last year, the revenues of that segment has gone up by double. So the revenues of Q3 in FY21 was 15 crores, vis-a-vis which it is now 29.7 crores in this quarter. So that obviously brings down the EBITDA loss, and we hope that as more international borders open up, and already many countries have started relaxing, as you know. So probably going forward, this will be better.
What was the 9-month number?
9-month would be around roughly you can double the numbers.
60 crore.
Yeah.
Okay, and loss is minimal or your loss is substantial?
Loss is reduced, I would say. I mean, in any case, this is not such a big contributor as the hotels are, but yeah, it's reduced from by about 1/3 from what it was last time.
Okay. Thank you so much.
Thank you, Sumant.
Thanks, Sumant.
Thank you, sir.
Thank you very much. I believe that was the last question. Like now, I'd like to hand over the call back to Mr. Oberoi and Mr. Kundu for their closing remarks. So please.
Naveen, nothing specific other than to say a very big thank you to you and to the people who dialed in. And we are optimistic about the future of travel, whether it's corporate or leisure. And I think we will see an upward trend over the next in this financial year, and hopefully that should grow over the next financial year as well.
Take this opportunity to thank you on behalf of all of us at SKP Securities. Thank you, Mr. Oberoi. Thank you, Mr. Kundu. Thank you everyone for joining in, and we look forward to hosting you once again in the next quarter. Thank you and have a nice day.
Thank you.
Bye-bye.
Cheers. Thanks so much. Thank you very, very much.
Thank you.
Recording stopped.